Hello, everyone. Welcome back to the NJ Show. Are we live? That's the question we find ourselves asking every single day. Are we live? Are we live? Are we live? Can somebody... We are. We are in fact live. Fantastic. We are live. Hello everyone and welcome back to another episode of the NJ Show. It's your boy Trader NJ. I hope you guys are all doing well. Get your comments in, smash the like button. Make sure you're subscribing to the channel, bottom right hand corner. I'm going to do a quick shout out before I bring our special guest on today. You know we love bringing on special guests for the NJ Show. Today we're going to be bringing on somebody who I have a great amount of respect for. I've been watching this guy grow since 2020 and he has been phenomenal in the space. His take on the markets is very, very different. It's the same, but different. And I think that you guys are really going to enjoy it. All right. So let's have a look to see who's in the chat today. So we've got Hafuel, we've got Daniel S, who's always ready for the show. We've got Stephen M Crypto. I mean, it wouldn't be a stream without you, my friend. We've got Twinsy, who says, yo, hope you're all having a good time. Yep, thank you very much for joining the show. Appreciate you, brother. We've got Phil, the Flying Frenchman, who's saying good morning. Welcome to the show, Phil. Appreciate you joining. It's a good Wednesday to be joining the show. We've got a good show lined up for you guys today. Hafuel is saying, "What's good, everyone? What's good? Hope to see everyone in the chat." What else have we got here? We've got Yusuf Ikejo joining the chat. Appreciate you joining, my brother. Thank you very much. Excuse me. Elizabeth in the chat saying, "Here I am, fam. Good to see you all." Yes, I saw a lot of comments looking for Elizabeth. It wouldn't be a stream without her, would it? We wouldn't be a stream without her, nor would it be without Hafuel. So let's keep going. Show some love and respect to the moderators. Make sure you're getting your comments in. All right. We see your comments and I shout you guys out. So make sure you guys are getting your comments in. All right. Everybody's saying live and clear. We got Nicholas Giroux, who's been joining the show every day for the past week. Yo, brr, 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 says Nicholas. Thank you for joining the show. We've got Faisal here who says, "What's up, my G? All good. Thank you for joining the show. Appreciate you." We've got Crypto Mac here as well, who's saying ISO and NJ are legends. Yep. Thank you very much, my bro. Mr. Wet says, "Sup? How's it going, my bro? Good to see you." Alex. What's Alex saying? "Can't wait to learn something new. So let's begin." Well, that's a very, very interesting thing that you're saying there, Alex, because we are going to all learn something today. You know what I love about my guests? We always bring the type of guests on the NJ Show where I turn into one of the people in the comments. All right. Whenever we bring SC on, I'm in the comments and I'm like, wow. Oh my goodness. When XO comes on, oh my God, I'm starry-eyed. I'm starry-eyed, you know? It's not going to be any different with CryptoISO. It's going to be the same thing because I've gone through some of the stuff that he's doing and oh my goodness, you're going to love it. You're going to absolutely love it. So I know that a lot of you guys love price action. I know a lot of you guys love, I know a lot of you guys want to be more focused on trading as opposed to a lot of the FA stuff we do on the show. So you guys are going to really, really enjoy it. We've got MWO who says, "Let's go, NJ. We're starting the show." And one final comment from Mr. Wet that says, "Give my brother a like." Without a doubt, make sure you guys are smashing the like on the video. We want to get to 100 likes. Don't let us down. All right, don't let us down. And finally, Kalayan, who says, "Glad to catch you at the start of the stream." Thank you for joining the stream, Kalayan. So without further ado, I'm going to be bringing on CryptoISO now to teach you guys something, teach me something, and we're going to have a great show. All right. So make sure you're smashing the like button. If you're loving crypto, make sure you're subscribing to the channel and bottom right hand corner, and make sure you are getting in the comments. All right. And if you guys do really well, maybe we'll talk a bit about PYR towards the end of the stream. All right. So without further ado, CryptoISO, how you doing, my brother?
Hey man, how's it going?
Yeah, it's going. Yeah, we can hear you loud and clear, sir. It's going very, very good. Just wanted to say thank you so much for joining the show. For those of you in the chat, CryptoISO, it's actually very early where he is at the moment, and he's woken up for us. He's woken up super
I'm
early.
here.
Yep, he's woken up super early to come and speak to the NJ community. So, guys, in the comments, make sure you're showing ISO some love. Make sure you guys are throwing up some love for CryptoISO. So, CryptoISO, I've got a question for you straight away. All right?
Sure.
Whew. What's the situation with Bitcoin, bro? Oh, is it over, or do you think we're going to get another bull market?
Oh man, is it over? No, I don't think it's over. I think it's just very much the victim of the macro landscape in the sense of how people look at risk and the global liquidity situation right now. So, I mean, it's very cliche to say, but Bitcoin has never been in this environment. We all know this. What is going on in the world in terms of interest rates and the lack of liquidity that we once had, in terms of cheap money and money being essentially flooded into the system, equates to more capital that can be basically spent out on the risk curve, which I view as crypto, right? And so excess capital allows people to buy these types of things. But when things tighten, i.e., liquidity, which impacts the consumer, I mean, we see it all over the world. Inflation, I'm sure all of you have heard that word nonstop for the last, 6 months to a year. That's putting pressure on assets like crypto, obviously equities, to be the favorable asset class to be in, right? With a rising dollar, anything priced against it is going to be going down. So in the past, the dollar has been considered a shit coin. Everyone on crypto Twitter talking about that, and assets priced in it were going up against it. So you can argue as like asset inflation largely just based on money printing, or is there real value in it? And so we're going through a digestion period right now in global macro, where there's a huge shift in asset classes that are favorable, and crypto is just the victim of that, falling to the wayside, just as it has with equities and stocks. And it's interesting because you hear a lot of people talk about correlations in the crypto market in terms of we're watching the S&P and the NASDAQ tick for tick. We're essentially trading this tokenized version of tech, or high beta tech on steroids, and that's kind of why we love it. But it's really just gone down with the rest of the market. Now, last quarter, there was a couple weeks of you can call it relative outperformance to equities. If you looked at NASDAQ and S&P, if you looked at Bitcoin and Ethereum, a couple things that I like to chart are actually ETHUSD versus ES. So S&P futures versus Ethereum. It shows you how crypto is doing relative to that index. You can do it against the NASDAQ too. You can also do it against Bitcoin. And, we just had the month quarter end, which is an interesting time for a lot of things as capital flows start to reposition. People try to figure out how they want to position for the next quarter. And, crypto was almost like this thing that people were hiding out in, even though the volumes were somewhat low. But there was this, we'll call it a phenomenon. It was essentially just, why is crypto doing better than the rest of the market, right? And we all think, well, there's a time of decorrelation, but it's just a lag it'll catch up to the market. And the first day of the quarter and month that we recently just had, equities outperformed crypto, right? And so you got to ask yourself, okay, is there a repositioning to broader risk outside of crypto right now that makes it more attractive? And if so, what is that saying to you? Well, there's a couple things that I look at in terms of the way an investor might approach the market from an institutional buy side or an asset manager saying to themselves, outside of technicals, right? I think 3,500 was a really big level on S&P.
Do you think, sorry to interrupt you there, Trip.
Sure.
Do you think it would be all right if I pull up your screen while you're
Yeah,
discussing? Yeah?
yeah,
Cool.
yes, that's fine. So I have a lot of charts that I look at on a daily basis, but yeah, these are basically some of them. So if we go to kind of the macro, let's go to the macro picture here, right? We have your S&P futures, you have your NASDAQ. This is BTC USD versus ES1, right? So this is showing me relative performance versus the market right here. Look at this. So yeah, it went up, and it was going up during that period that we talked about. But given that the equity markets have kind of showed a lot of strength recently, you would think that the higher beta risk asset like crypto would probably follow, and it hasn't, which is, again, interesting to me in the sense of how people are positioning for Q4. It's a bit early to say, but who knows? And if we look at Ethereum, right, ETH versus ES1, similar, and now I mean, we can all draw trend lines, but clearly this is a downtrend with we're making lower highs and lower lows, right? So lower high, lower low, lower low, lower high. So now we're just trying to figure out, like, is there an aha moment for crypto that's lagging if equities continue to go up, as everyone's looking at October, all these things. And there's so many different cross currents in the markets right now from a geopolitical standpoint, as well as just macroeconomic positioning to see, what is the Fed going to do? Obviously, we saw some sort of easing from the Bank of England, Germany, but there's this belief that the Federal Reserve in the U.S. is going to pivot. I don't think they are, but the market is forward-looking and they can try to anticipate things, and we look to trade those windows where we can get a rally during this bear trend. So let's just go back to how I look at kind of the macro picture that I was talking about. So here's the S&P 500. We have a lot of drops on this chart. If we look at, and I'm going to turn off some of these indicators so they don't confuse you guys, but I use something called TD. It's like an old school indicator.
Yeah, I mean, it is old school, but we definitely should have a conversation about it at some point. Just because when I joined crypto in the past, I saw this whole TD9 concept, and it took me a while to get on board with it. But I know a lot of these guys might want to know what it's about to a small degree, So if you get a chance, please feel free, bro. Please feel free. You're at home here on the NJ Show.
Yeah, I'm just trying to find the right. Okay, here's a good one. This is the S&P futures. This is the. So for those who don't know, this was the chart that I was just showing you against Bitcoin and Ethereum to show relative strength. So if we look at what this chart is really telling us, okay, well, the market topped basically the end of the year, 21 January, right? So we put the high in, and similar time, crypto topping, maybe crypto topped a little, preceded it. Again, that's maybe an indication of higher risk asset being sold prior to equities, as like people are exiting the market, selling things that they don't need versus what they may need. So I look at this chart and we're clearly in a downtrend, and I like to use Fibonacci as a way to look at possible retracement levels. So retracement levels back up in a bear rally. So you can identify swing points. Okay, here's your high, and you could see this wick down here and then see these two wicks here. You could say that like this was clearly defended, call it that, right? So we basically dropped from 4,800 to 43, right? 12%. Cool. So we rallied. And then we dropped 10% here, right? And then we had a little bit of a rally. Here was probably the most severe drop, which was 20%. And that was to the point where basically we came to the first Fibonacci retracement level, and these Fibonacci's are based on, when I use them, I use a swing point of like the major low and the major high, right? So clearly this was the low of the market. This is the high of the market. So price after basically topping, given this is a macro top, like these types of reversals are not common. We went through like over a decade of bull market of money printing. So I think that's also important to put into perspective of like how this is going to resolve is going to take a lot of time, in my opinion.
Well, do you know what? I want to say something just here real quick. I've been listening to a few people talk, right? And without mentioning names, one of the things that I've been hearing is, we've had a decade of bull market where the Fed have been able to step in and, defend us every time things got really, really bad. Now, the argument that a lot of people are making is, all right, well, number one, Bitcoin has never really faced a recessionary environment, right?
Yeah.
And number two, obviously, we know what the global liquidity crisis is, the Fed pulling out liquidity from the market. A lot of, excuse me, a lot of people aren't talking about it, but I'm glad you mentioned it immediately. And the third thing is, if we are breaking out of a decade bull market essentially, could we see a potential multi-year bear market? And I'm not a fan of that theory. I don't think that we are going to see a multi-year bear market. I think of course all we can do is look in hindsight at the moment, but Bitcoin and the rest of the crypto market tend to have three phases of a market cycle. A bull market, a bear market, an accumulation period, and then back into the bull market whenever accumulation ends. um, what
Yeah,
is
I
your
mean,
thoughts on that?
I
What
think
are
the
your thoughts?
larger, I think the people, I think what, look, I'm a natural skeptic. So when I came into crypto, I came from the traditional finance world. And I was like, what the hell is this? And then I started to realize that there was something here. Um, it was more of like a rebellious movement um, against the establishment type situation early on. And in 2017, it was very much cheerleaded by the institutional investor class, and Mike Novogratz being one of them, as this like store of value digital gold, right? So if we step back and we look at the timeline of what Bitcoin's different personalities are or use cases and what it was intended for, it's interesting to see the shift in narrative since inception to now and what has worked and what hasn't worked. Well, I would say the biggest one that was the selling point was scarcity digital gold. I mean, you can argue that it really hasn't worked in that regard. Peer-to-peer cash was like why it was originally invented. I don't really know anyone using it. Sure, the Lightning is around, but like we haven't really seen too much implementation on a large scale of it. And then if you look at, what was the biggest one that drove price up so much, and it was this hedge on inflation. Okay, well, if Bitcoin had any time to shine, it was when the dollar was ripping and it completely failed and it dropped alongside risk assets. So to me, it's like there's a massive identity crisis for crypto, Bitcoin in particular, right? So what becomes the next narrative and why do people buy it? It can't be on scarcity alone. Like there has to be a reason, right? So the next bull run, whatever it's going to be, what is the narrative going to be? And it's interesting to see the whole thing come full circle with guys like Stan Druckenmiller talking about how this is potentially a crypto renaissance moment. Mind you, the guy doesn't press market buy when he says that, even though all of crypto Twitter did. That's something that takes a really long time to play out. And so there is this essentially like time frame for me of when crypto can separate itself and decorrelate and become the asset that people had dreamed of, right? So I don't see anything really from a narrative standpoint of why crypto should be outperforming the rest of the market up until that was kind of said, right? And that would the thesis on that is basically everything's broken and this is the best bet. I'm not fully sold on that. That takes a very long time to materialize, but um, yeah, like I think crypto is going through a massive identity crisis. I think the regulatory hurdles that it has to go through. I mean, if you read about it every single day, like what it's dealing with in terms of the government putting pressure on it. Obviously, like there's been a lot of cases coming forward from the past, and regulation takes a long time. I mean, these things are from like 2017, 2018, like Ian Bellina, right? So what has to be gone through everything, to make it clear to everyone can also be a hurdle for investors to jump in, right? Maybe not so much Bitcoin, maybe not so much Ethereum, but the overall asset class as a whole.
What do you
So
think
those are
of?
just some side thoughts on
No,
crypto.
no, definitely, definitely. Though your side thoughts are each of your side thoughts are a whole subject within itself. I mean, each of those side thoughts.
Yeah.
But the best thing that I could ask, I guess, in this particular instance is, what do you think of the Bitcoin halving in terms of a potential catalyst for 2024? As far as I can sort of see, that's kind of the next major event for cryptocurrency. And in the past, we've seen that when we do have Bitcoin halvings every 4 years, that the market tends to follow up later down the line, shortly later down the line, with a bull market. we know that crypto spends more time in a bear market than it does in a bull, but as a catalyst, as for instance, I just feel like it's the right thing to say based off of what you said, where you said, why would somebody look to buy? Like, we have to consider that, we have to ask that question: why would somebody buy? And I don't know.
Yeah,
I just
I think yeah, EXO is a guy who follows the happening pretty closely in market cycles. I'm sure a lot of other people do, and I think you can look at hodl waves and see when big whales are accumulating, et cetera, on-chain stuff. It's interesting. Bitcoin hash rate is at a very high level right now. Yeah, look, I don't think it's going away. Okay, I think the asset class is very much a demographical shift in the sense of the way younger generations look at society from a digitalization standpoint and how they view their lives, right? I look at my nephew, the way he interacts with his friends, they talk about NFTs, like just look at how money circulates electronically. Like there's no question in my mind that this is going to be part of the future. And as old people essentially die, new people come into power, and this is the way
true,
they live their
true,
lives.
true. I also
You can
think,
invest on that asset class, that thesis alone. Now, is Bitcoin going to be the one? I don't know. I mean, it has first mover advantage. It definitely has no CEO. It's probably the most decentralized you can argue.
yeah,
But the use case of it still is like, okay, well, is it going to actually be money? Is it going to be store of value? Is the next bull run going to be largely driven by sovereigns wanting this and larger players? Like, because the institutional narrative was complete bullshit. Michael Saylor bought a ton of Bitcoin, and he's a
got wrecked.
psycho, and he's
Yeah,
on his
you
own
got wrecked.
ship.
Yeah, yeah, yeah. You got
Elon
wrecked.
bought Bitcoin and sold it. So then it tells you that the asset is tradable on a balance sheet. So the incentive is not or the thesis is not aligned with Elon Musk and Michael Saylor. No one has really followed Michael Saylor's path. So the no follow through on that was like a really big hiccup in that thesis. So whatever the next narrative is going to be, it's probably going to time up with the halving, and it's probably going to time up with a potential solution to the global liquidity crisis, whether that comes from the Fed
Fantastic.
easing.
I want to pause you there. You've said it. You said it. That's exactly what I was waiting for. I was looking for it, and you said it. So, based on what you just said, because it is more exciting than these people here are aware of. Now, instead of I want to rewind a little bit now. So we've said that the halving could be a potential catalyst. Okay, now the halving, we know, is it's more than a year away. It's about a year, maybe towards a year and a half ish away, right?
Yeah,
Now,
it's
in
like
between,
540 days or something. I looked the other day.
guys, come on, guys, in the chat, I want you guys to
I think it is, maybe.
I want
Was
you
it?
guys to be talking in the chat right now, and I want you guys to show some love to Isa. The amount of alpha that he's dropped in 20 minutes, I wasn't even prepared for. I'm here listening, and it's like I'm a fan too. Right, so Iso, the next question I've got here is, if we have catalysts in 2024, then what do we need to see happening between now and 2020? We've already mentioned that we've already mentioned the GLI, right? The Global Liquidity Index. We know that we've got a lot of monetary policy pressure on the stock markets at the moment, and I think that's where I interrupted you earlier when you were discussing what was going on with the S&P. So what would you want to see in terms of a low being formed, or in terms of any sort of fundamental changes in the market that you'd be looking to see in terms of what we would need to get to that 2024 halving?
Sure. So I'll just finish this chart, right? So
Sure thing, bro.
every time we've come back into a Fibonacci retracement, the market is sold off in a recognizable swing high and swing low. So if you take this low to this high, we basically came back into 4,500 area and we failed. And I mean, you can pull fibs like from here to here and probably look at something, but if we're looking at the major swing points, so that was a 15% drop, that's a 20% drop. So if we're taking this low, which was a bit, through the 38.2 fib, and this high, and where do we come up to? We came back up into this like 4,300 level. I mean, even if you were selling 4,300, you don't need to get the Pico top. You're de-risking a bear rally at probably 90% close to the top, maybe more. right? So I look at these key swing points and they match up with SR, like on the chart, pretty clean, right? So this rally in, call it June, right? And you could have bought July, was largely a byproduct of having a window for the market to breathe, because there was essentially no Federal Reserve FOMC. There was a pause. They basically have a month off, and people were looking at CPI numbers, saying to themselves, "There's a chance this could come lower, get a commodity price essentially topped in April." Right, so you can start to go through charts. A lot of the pricing of things really topped in April, and looking at what the components of CPI are, and so the market to anticipate a move into those numbers. That's kind of how I look at. And so we got a really nice rally, and the hammer came quickly with the Jackson Hole, right? So we know that this is a swing point and this is a swing point. So now we have 17% drop. If you're strictly just a trader and you look at percentage decline on a move, understanding that things don't go down forever or in a straight line, then you can start to maybe anticipate a bounce, right? So I thought we were going to get it around 3,600. Okay, close, but we hit 3,570, right? I mean, you can look right here and say, all right, that's this high. Or you can say the market basically front ran the 3,500 number that everyone was looking for. And we have this potential sentiment shift in the market in relation to, we don't hear from the Fed until, I believe, November. So there was an extended period after we had just heard from them. There's been discussions about what levers the Fed look at as an indication of potentially, I wouldn't say easing, maybe even pausing, or just dovish language from them, right? And so yesterday we had a number, the JOLT jobs number. Where was it? Yeah, right. So job openings, and these went down 1 million, right? So that's telling you that, okay, maybe there is a potential softening in the labor market, which could make unemployment go up, which is something the Fed has talked about ad nauseum. And so hints like that, that's why the market rallied yesterday, because that, and then they're looking forward to NFP, which is on Friday for non-farm payroll, right? And then on the 13th, we have CPI. And so, will the CPI be lower? I don't know, because rent and housing is such a big component of CPI. That has not rippled through yet. I don't think we've seen the softening, so maybe there's a month lag on that. But if the market believes there's a month lag and they're forward looking, then this rally to me has legs. And so, yes, this is a chart and a series of lower highs and swing points, but there's reasons why the technical levels match up to the way investors are positioning. So we just had a month quarter end. We hit 3,570. We ran 3,600. We reclaimed it pretty quick. I'm going to consider this a very big swing point in the market. This is a considerable rally. And let's take this swing point right here, right? And so let's take this swing point because we basically dropped here and this was our local top. So if we take this, by the way, this was the CPI print that everyone thought was going to come in lower, including myself, and absolutely nuked everyone, and we've gone straight down. So a Fibonacci retracement back up here to 39.50, like this area, underside retest, into, let's say, really bullish sentiment into the CPI, and the CPI scares people, then maybe you get your lower high. But for now, I think the market is risk on. We have these breathing windows for it. And I very much play the Fibonacci retracements back up, investor sentiment. I think there's a window of time to continue this rally. I think shorts got a little too excited, and that's where kind of I'm looking at it from a trading standpoint. I'm selling this rally though, unless there's something that's cardinally different that makes me think that it can extend.
Agreed.
And there
Agreed. We
are.
are still technically in a bear market. And just to add confluence to what you were saying, I mean, I know this news is a little old now. This news came out just before the job openings news, but we shared this on the stream yesterday, where the UN and the IMF have openly come out and sort of warned the Fed to say, look, you guys are the rate hikes are coming in too frequently, and going into the winter we need to calm and slow them down. So what we were talking about yesterday was the problem isn't going away just because they slow it down. It's not going to go away. The problem's going to remain. Therefore, we are going to remain under the market conditions that we have until the problem is resolved. But at the same
Yeah.
time, it could if the Fed do agree, because it was directly towards Jerome Powell. But if the Fed do agree to chill out on the rate hikes just for a couple of months, it could give us a bit of breathing room. It could give us a little sort of relief rally like what you're discussing here.
Yeah, I mean, these are really small rallies, right? Like we haven't. I don't think the Fed is pivoting anytime soon. Like I think for new market participants, traders, which come out of COVID, everyone being in their house, or just even before that being in the crypto bull market, like crypto distorts time and reality of how long things take, right? Like you get in a position in an altcoin, you're like, all right, I want it to pump. Like that's just like not not how the asset prices usually work, except like we're in such a volatile time right now.
Crypto
And
tends
everyone
to
was
hit
so used to
different.
that. Everyone was so used to that, right? So
Yeah.
it became like a sense of normalcy where it was up only for so long, like a very long time. And so this um, digestion period, readjusting to how markets work now in like a very choppy manner is like, look, no one wants to buy anything. They want to sell it as quick as possible and they want to buy it lower, right? So that's why the charts look like they do. It's like violent bear rallies, low liquidity, and get out, because then everyone's doesn't want to be the last one holding the bag. And so that is just basically a result of investor confidence and clarity. And if there's no clarity, then it's hard to hold risk, right? And so, that clarity is not in the market. And like, I don't think it's going to return for a pretty long time. The Fed is not going to be bullied by the UN or anyone because they know that they can't afford to screw up. If they screw up and they ease and, things get worse, then like it, they're not going to kick the can down the road anymore. As much as the market wants to like try to front run them or just, insult them, whatever it is. I mean, I would say they're doing a better job than the rest of the world personally.
I agree, actually.
And they're
I
sticking
actually.
to their guns. And so like, you don't fight the Fed on the way up. Why are you going to fight on the way down? Right.
At the same
I'm
time,
happy
though,
to
bro.
trade bear rallies, but like, I understand that that's it. Like that's all they are, unless something happens that's going to make me think that it could extend a little longer. Now there's the
But
whole midterm theory coming into it.
you've
So
mentioned something really, really good there, and I just want to very, very quickly add on that and kind of pose a question to you at the same time. You know, the bear market rally that we had at the beginning of August, sort of end of July. Well, it was kind of mid June that the market started going up. Confirmation happened in around July, and then we had a bit of a pump in the markets for August. For me, that wasn't really a bear market rally. I mean, I've seen a couple of bear market
this
rallies in
one,
the past. Yeah, that one. Would that constitute really as a bear market rally? We only took out one lower high, and then we've made a lower low. Is that part of the previous trend, or would you consider that a bear market rally? I mean, I feel like a bear market rally
no,
would.
these are all bear market rallies because we've made lower highs and lower lows every time.
No, but
So
what I
we're
mean
just
is,
setting up to make a lower high. Yeah, that's the thing about bear market rallies is they want to make you believe that, dude, there was people who were like, yeah, we're going to 4,600 S&P, no question. But like, what materially changed? Nothing. The market had a window to rally because we didn't hear that much economic data. That was it. That was
agreed.
literally it. Like, and there was the anticipation that things were going to get better, and then the Fed came in and was like, "Hey, you guys are idiots. We're literally trying to stop this behavior that has been going on for so long." And so the way that works is they crush demand, and they do it in several ways. Interest rate hikes being one of them, right? They're taking liquidity out of the market. They're not putting liquidity into you're not injecting liquidity in, you're taking it out. So we've been injecting it for, such a long time. Now we're extracting liquidity. The game changed, right? So it's just hard for people to grasp the idea that the game changed because they had such a nice life for so long. And so this was 100% very much a bear market rally. Yeah. Yeah, totally. I
Do
mean,
you
look,
think
dude,
though? But
if you're not selling, if you're not selling a 19% move on an index, I don't know, from June 21st to whatever, August 16th, and it was largely like, if you knew kind of why this was rallying, it was the anticipation of these things. Sell the news event, Jackson Hole, whatever you want to call it. Like but like also look at the confluence of this. I mean, if you turn on the 200-day moving average, where is it? No, that's the 50. No, hold on, it's somewhere. No, this one. It's insane. Yeah, I was like, this is too perfect. It's going to overshoot it.
yeah, that's actually perfect. You're
XO
right. That's
shorted
actually perfect.
this thing like I was just like,
He's too
I
good.
mean,
He's
yeah, but do
mental.
you get a perfect touch of an average like this and a trend line? It's insane. But this is how technical the market is. So, yeah, like, could we rip up here 39.50 100-day? Sure. Fake everyone out, lower high, bam, come down, take out this low, and you're getting closer to these bigger Fibonacci retracement levels of the whole move, like this 3,200 is the 61.8. Like, look at this area down here. Fine, 3,500, that's the 50%. Like, markets typically respect these Fibonacci levels on the higher time frame. So I think you can really fake people out and do a big move and come down. And does that come, like, if this rallies hard into CPI and and that number is not what people expect, it's gonna puke. So I think being aware of the macro events coming and how the market is traded into it, bearish posture into the macro events typically can be like, okay, maybe you want to buy it. Bullish posture into macro, no. I'm not a buyer. I like to buy into the events, anticipate something, but I'm not going to hold into it knowing that it's a 50-50 coin flip, and we know how fast people sell. So that's the S&P, and how I look at kind of the macro. And if I look at like crypto,
Fantastic insights, bro.
if I look at crypto alongside of it, I can like take this chart and essentially look at something. I don't know if
Ooh.
your new followers look
Right.
at.
So let's before we dive into this. So guys, in the chat right now, we've got 115 people watching. Let's get a like spike. Make sure you're getting your comments in to show some love to CryptoISO. Make sure you're subscribing to the channel. Let's get to 100 likes, all right? I know you guys can all do it. So this is where it starts to get, I mean, with all the alpha that you guys have had just now, right? Including myself. It's been an absolutely beautiful conversation with ISO. You guys are about to see something now, which is pretty much what I wanted you to see. Now, you guys all know that there are a lot of terms that are thrown around on crypto Twitter, especially when you see people looking to trade. Now, me personally, one of the reasons I love crypto, one of the smaller reasons, is that it's a beautiful sort of introduction to finance for a lot of people who are scared of the subject. Now, what CryptoISO is going to show you now is kind of a bird's eye view into how he plays this game, and that's to do with liquidation levels, right? So I'm going to let CryptoISO take over again here, but make sure you guys are smashing up the likes and get your comments in. Let ISO see that you guys are appreciating this amazing content. I'm excited for this next bit. So CryptoISO, aka Trip, take over, bro.
Okay, so this is the way I look at price when you're in a range or you're in a non-trending environment. Yeah, we're in a downtrend, but I think we're coming towards like an exhausted downtrend, or it's slowing down. Let's just call it that. And price is ranging, right? So we all have our charts, right? And we draw lines on them, and we pick out levels, whether it's Fibonacci. We look at where stops could be, support and resistance, and that's great. But one thing that I like to do is try to have a bit more of an understanding of why price might gravitate to certain areas. Like there's a reason things happen with price, and largely driven by liquidity. And so if we look at something like this chart, and this is by High Capital, I've been using these guys for like, 2 years or something. And it's a system that I developed with a friend of mine, Zoran, and we came up with something called liquidity theory. It's kind of common sense. It's just a much better visual to understand the movements of and how market participants, larger ones, with you being maybe the smaller fish, take advantage of filling orders or just positioning for larger moves. So we can let's just take a look at Ethereum in terms of this, because I think Ethereum structurally has a pretty good range that you can define. So we've basically traded 1400 to 1200. That's what I would call a range. I like to take these extreme points and here's your touch here, here's your touch here, here's your touch here. We've had basically one down here. So we're trading in a 14% range, with the midpoint being around 1305. And we know that the bottom of the range hasn't been really touched that much down here, but it's held here, and we have resistance up here. So I don't know, last night in some side conversations, I was expecting a pullback, because if I pull up the liquidity on Ethereum, and we can look here, and this is going to be showing us the Binance ETH liquidations tier 5, which is the largest, called bubbles, which are position sizes. And the way that this software or platform works is essentially records market orders, the size, and then applies a leverage amount to where that price liquidates. So it's like essentially a standard deviation of where the position is entered. So you can see that shorts entered here at 1337, right? So they would look 100x, or this gray number corresponds to 100x. And then we have here this teal, maybe I'm colorblind, 50x, and so on. Someone who's entering a short here at that leverage point is probably going to get liquidated on a sharp move up, just because price is not that far away. Here, more common. This one, not as common. So I tend to look at the 50x and the 100x. These are shorts. Now, if you look at the longs, okay, this pink one is going to correspond with the 50x longs, and we can see that longs entered 1337. They liquidate 1317, and obviously closer above price, 100x position here is going to liquidate at 1331. So that just gives you a bit of understanding of how the liquidation levels work. So you can see where the position entered. Green is long, red is short. And then you can start to deduct some sort of reasoning around why price might try to grab liquidity in certain areas. So our bottom lick level is 1227. Well, guess what? That's near the bottom of our range. And what's our top? 1404. This is on a tier 5, largest liquidity, least noise, so you can see. And if we look at the ratio, there's total long liquidations 8, total short liquidations 6. So there's more longs than shorts in the market. And this is why we have something called a green cumulative lick delta. So it's showing you that there's more longs in the market right now versus shorts. Now, if you look here, well, it's like red delta is all telling you that there's more shorts in the market. And guess what? What does price do? It goes up. It takes out shorts. So it's this ping pong effect between market participants longing or shorting. If I turn this on to tier 1, it's going to give you a much noisier picture, but it's going to give you smaller position sizes and show you a more granular look at liquidity. So the first thing right off the bat is I look at the top lick and I say it's 1420, and I go here. I go here, and guess what this is? 1411. So if liquidity was run completely to the top side and it took out all these stops, it would come into this basically resistance zone. This is why I have this blue box here. Like there's there's some science to these things on my chart. This would be the top lick on ETH. If that happened, this is likely a very high probability short, because one way to trade the market is identifying exhaustion points. Price sometimes has to go down to go up, which it basically means it has to grab liquidity. It has to remove market participants. That is someone dropping price on purpose to fill orders. Once they have been removed, if there's no one if they're all on the way down, let's say they all come in short on the way down, it's easy to squeeze them on the way up. Vice versa here, if we start running liquidity to 1400, well, guess what? There's not really that much to push anymore. Chances are everyone's going to chase it. This delta is going to be mega green. And now the exhaustion point has come on the top side of the range. And you have people literally stacked here who degen longed, who are just waiting to get nuked on the downside. Unless you have insane spot buying out of a range that holds, but right now it's largely liquidity games. So you have 236 longs to 222 shorts. You still have more leveraged longs in the market. And so to me, I think that, you know, if I look at this chart and I take basically our swing point, which was here at 1260, and we take our high, which was 1370, right? We didn't take this high. If you draw a fib, well, you're going to come down into this like 1304 to 1315 area. We just took this stop here, but there's still some liquidity below. So like if price came into like this 13, 15, 20 area, and I'm looking at my liquidity, well, we'd be taking out a nice 50x long, 52 million at 1317. You'd be grabbing this 1311. You'd be taking out some of these, and you'd be coming into like essentially like a support zone here on this SR flip. So you're combining TA with liquidity, and chances are this delta is going to come off and maybe turn red, because you'll probably have people starting to chase this down, shorting it. Like you can see here, there's a short liquidation at 1343, and there's one at 1357. So if we go to tier 3 and we try to look at maybe less noise, and this is where it becomes somewhat of an art, we can see that.
Just a quick one, Iso. You're essentially, just for the people in the chat, you know, just I don't want people to get too confused. I'm loving this personally, but you know, essentially what you're doing is you're combining price action with these liquidity levels. You're using these liquidity levels to sort of give confluence to the support and resistance levels that you're marking out on your plain charts. Is that right?
Yeah, and this is the whole thing about like, I want to know why price gravitates to some areas. This is telling me exactly why price moves to some areas. I can have something marked from a liquidity standpoint. It might take a week to get there, but I mean, look at the stair step action of price, but it always eventually ends up seeking the liquidity that's needed for it to engineer the move that it's trying to do, right? So we can come down here and take out these longs, like, which are pretty nice targets. And then you're kind of getting into these 25x longs, the pink bubbles, which is, they're not as high of a hit rate, but they do get hit. But like these ones are no brainers, like the 100x longs. So that's why I've matched up the fibs with like a liquidity level that I think is feasible to where price can go. And if enough shorts come into the market and we've taken out enough longs, God, I'm like losing my voice. Then
You're doing good, bro. You're doing good. Trust me,
you're
the amount of alpha that you're dropping right now, I'm telling you, everyone in the chat, when I've noticed this on this show, right? Whenever everyone in the chat goes super quiet, that's when you know they are fully listening. So I'm telling you on behalf of myself and everybody in the chat, everybody's loving this, bro. Everybody's absolutely loving this.
yeah. So like this just seems like a very logical area for price to go to, where it should have a reaction based on a Fibonacci retracement into liquidity around this zone. So you might get something like this. I don't know, right? Comes out, and then maybe you get that move, right? You're still holding above mid-range. Like, I think with risk on being very present in equities, and my thesis being that, I mean, sure, we're pulling back a little here, but we ripped. Like, maybe you get one of these, like you're coming back, something like this. Crypto still follows this stuff, and like I sometimes can look at a ETH or BTC liquidity chart and say like S&P is probably going to pull back because like there's a stupid amount of longs in crypto, and it will match up just because the way the markets are trading now. So yeah, like let's look at to see if we have a reaction here on ETH in this zone based on what we see in the liquidity profile. I hope that's clear for people. I mean, it's definitely a new way to look at the market if no one is, or if you're new here. But I find it helpful, and you can do the same with BTC. And we'll go through the exercise. So let's look at BTC liquidity. We'll run that on Binance. It's like I'm running out of water.
No, you're doing good, bro. You're doing good. So for
So
everybody,
here's a really
yeah,
good example. There's 57 long liquidations to 23 short liquidations, right? Look at this. So cumulative lick delta is telling me there's 2.84 billion in long liquidity that can be taken on BTC. So if you look at the move that just happened in crypto, BTC led it, right? And if you've been around in market cycles, you can see that, I wouldn't say healthy, but a typical move is BTC moves and then you get this catch up. It's almost like the less risky asset moves first, people pile in, there's a bit of confidence brought back into the market. maybe it trades sideways, and it gives room for other markets to catch up. So altcoins being one of them. I think you can look at a lot of alt BTC pairs and start to use come to a conclusion with that thesis. And one thing that I have been looking at is ETH BTC. Like ETH BTC obviously has been going down since the merge. It kind of bounced off this trend line here, tried to go up, and now we're kind of bleeding again. But we are still holding this like pretty big POB, which is a point of breakout or a point of breakdown. And so basically price tried to consolidate here and went straight down. So this area is pretty big to hold. And if you pull a fib on the whole thing, okay, well that's, you're getting around this like 0.065 area, maybe 0.063 is your 61.8 here, but price is trying to hold this. The most recognizable thing for me is this is a 3-day TD9. TD is something called Tom DeMark. It's TD sequential. It's an old school like Wall Street indicator that essentially measures exhaustion points of buyers and sellers, and it's based on a count of 1 to 9. And so when you get these signals, right, you can start to use confluence with Fibonacci, trendline retest, the idea that BTC ran first and we have essentially a catch-up play. I can actually start to see that in liquidity, because look at the liquidity profile of Bitcoin and look at the liquidity profile of ETH. There weren't as many longs in ETH, but there's a shit ton of longs in Bitcoin. That's because people have been largely positioning in Bitcoin. And so a rundown on Bitcoin, maybe, here there's like massive liquidity, like 19.8. This 19.7, 19.8 area is pretty big. And so if we go to the chart over here, this is Bitcoin. Oh, Jesus. Okay, hold on. We can, we're drawing stuff. We can start to look at this disaster of a price action. Like ETH is so much cleaner to me. Like this is not that clean. We can start to look at like important areas on the chart. So like, what is this? Let's go with the boom. All right, let's just take this zone, which is 20K, call it that, right? We can see like this whole zone is like, you're like poking above, we're trying to get here, we're poking above, but like this area down here, 19.5, 19.6, that's where the liquidity is. And like this is too extended to move up. So as I said before, price needs to come down to go up sometimes. So the way I would look at this is I would say, all right, let's take this as a swing high. Let's take this as, let's take this as the swing low for now, right? Because that's kind of where the move really started. What's that? 61.8, 19.5. Go to the liquidity profile. Well, we got 100x here. Got this, look at this cluster here. Like this would take out a lot of longs, probably fake people out. Maybe some of these overshoot it. And then maybe you have more room for a move up to grab this liquidity. And the chances are people who kind of have come in here are going to short this on the way down. We'll look at the tier 1, which probably gives you a lot more noise, but you'll see what we're looking at right here.
Just out of interest, bro, does this
Yeah,
show
see?
you more than just Bitcoin and Ethereum? Does it show you on altcoins as well? Out of interest.
Oh yeah, shows you on altcoins.
Okay, all right.
Like let's look at sushi.
Okay, yeah,
I
cool.
we bounce around here because this is one that I think actually has like an interesting chart. Okay, yeah. So we got a lot of people came in long yesterday. Cool, big impulse up. Now we're coming back down into a pretty key area. We got some liquidity here, but look, we have a red delta. So green delta, people came in, wash them out, starting to turn red. Maybe you grab this down here, trap in some more shorts, but then you have all this up here to grab. And if you think the market's going to keep going up and we're just in this pullback phase, which I really do, because this move just seems to want to kind of perpetuate itself and keep going based on those macro things that I was talking about, then I don't know, maybe pick up some sushi here and try to target like these highs. Like this chart is sushi, like I've been looking at, right? It's a pretty interesting chart, I think, because you have this turnaround narrative, whether or not you want to believe it or not. New management coming in, things down 95%. If we look at a weekly chart of sushi, first of all, I'm not going to try to have a bearish view on an asset that's down 95%, nor am I going to have any conviction to short it. I'm like looking at this like, okay, here, like we did 8. Let's just zoom in here. I would say that the important weekly candles are these two. Sellers failed to push it down. Sellers failed to push it down. I mean, these were in the times of like equities like dropping. And now we have this impulse on the weekly. You can draw a triangle here. We have a low, slightly higher low. Maybe we're trying to make a higher low. I think this can trade up to like, the top of this diagonal, maybe take out these highs, or maybe just goes to here. But we know that there's liquidity up to like 125, 130 based on that profile we just saw. So
like a 30% move, no? That's a big move. That's a huge. That's like 30%, right?
yeah, but we've
From
seen
where it is
things.
now to 125.
Yeah, totally. But like this is a pretty big volume candle here. It's kind of like this if you look at coins, they move for a reason. So if people want to believe that DeFi 1.0 has maybe a redemption arc, and sushi being one of them, with new management coming in, and investors have been positioning this whole friggin' time buying this. I mean, look at this, like for a move up, then you can craft that thesis along with the chart. And so, yeah, I think sushi is a pretty interesting one. We just broke out. We're retesting it. Maybe it fakes down here. Well, what do we know here? This was the liquidity. And what do we know is up here? The shorts. And so maybe get the pullback, maybe get the move up. That's kind of one thing that I'm looking at, and a way to match up narrative, liquidity, macro, like all those things.
How deep do you think the pullback could be on sushi out of interest?
109. Maybe you grab these 108, somewhere around there.
Yep,
I mean,
yep.
if you're looking at, so yeah, let's say, all right, so let's say ETH goes to the 1315 level, or BTC goes to 19.5. All right, what is that? 2%. Let's just say. Let's say you did 2% pullback on BTC. And I don't know if sushi was outperforming Bitcoin and Ethereum yesterday. So then figure maybe you don't get as a deep one. If you got a 2% pullback, that's 109. That's into liquidity. And so that's probably, if you take a Fibonacci retracement, I always draw them backwards, man.
I do the same thing. I do
take a fib.
exactly the same thing.
Take a fib, that gives you your 50%. It's kind of greedy maybe to get to this one. 109, like feasible level. Maybe you just got it. Maybe it's only 110. So yeah, interesting spot for sushi, I think. Right? If you look at the daily too, what do we have here? Like structurally, like this is interesting, and there's some reasoning behind it too. So,
well, yeah. I mean, from a
daily candles, like that's
from a price action point of view. Excuse me. One thing I've noticed on a number of altcoins, I mean, I know not all altcoins are going to move, but you've given us some good fundamentals to go along with why you think sushi might go. Now, one thing I've noticed with a lot of altcoins is after this 90% drop that we've had, some alts dropping 95 to 98%, we're getting some sideways price action now, and that could be sort of a signal to push up a little bit, to just to add confluence as to what you're saying.
Yeah, I mean, these things can go sideways for a really long time, but in accumulation zone, if you want to call it that, because you can't say this is, I mean, if this is distribution again, like then then sushi's probably going to just like not exist. I mean,
yeah, go to zero at that point. I know what you're saying. I know what you're saying.
The market cap of the thing is like 260 million. The total TVL on the protocol is like over 500 million. Strictly from a market cap to TVL ratio valuation, it's cheap. So that's a larger part of it. So if it's a turnaround story, you think TVL is going to come into it, then interest comes in. And this isn't tomorrow. This is like looking out as like a longer term play. Then you can start to apply things that make sense from a valuation standpoint as well as a chart. So down 95%, attractive market cap TVL. Weekly chart couldn't go down 2 candles in a row. You have an impulse now. You have some sort of a structure maybe being formed if there is a risk-on environment in the market in macro. I think people are looking for reasons to buy coins that have interesting stories. Like some things are just going to literally fail, whether it's they don't have the funding, like there isn't something exciting about it. But I look for things that maybe have exciting stories. So I don't know. This caught my eye, and I developed a thesis around it quickly and took a position and just trying to see how it plays out. I think if you're getting below this, it's probably not good. Below $1 is probably not good. But for now, high time frame, I said that I was going to try to look at things on a high time frame basis, weekly charts, before I make any trading decisions. Like, because there's a lot of noise in between, and it's designed to shake you out. If you take a view that's based on a day or an hourly chart, fine. Weekly, fine. So right now, I think we're just at a point in the market where maybe you can start to nibble and look at those ideas.
Agreed.
And
Agreed. Out of interest, would you be okay to look at XRP? I know that came up once or twice in the chat. We don't have to do it, but because I do want to ask about PYR as well. And Solana, I'm actually in a long on Solana at the moment. I've taken off half the size, but I'm in a long at Solana at the moment. But do you know the high block capital? Does that does that show XRP
yeah,
as
I can
well?
look at Sol. I can look at all that stuff. Yeah.
Sure. Thank you,
Hold on.
man.
So this line is like something that people are fixated on. I, I had tweeted about it, and people were like, "It's just a trend line." But I mean, there's a big relevance to this trend line. I mean, like, look at this. Like, it's marked like every lower high, right? It's respected it insanely well. So you're at this like moment here where you've actually broke it. And I don't draw trend lines like through things. Like, these are wicks, and now
Yeah.
we're seeing the 50-day moving average. Moving averages are obviously are sometimes a good indication of early signs of trend reversals or the posture of them themselves. I mean, look at the 50-day moving average here, the 100-day and the 200-day, right? Like, we're crossing above the 50 year and we're starting to kind of curl up. 50-day moving average is not really curling up right now. I mean, it wasn't here, but like 100-day is kind of flattening out. The 200-day is still like in a declining posture, call it that. But everyone's really fixated on this. It's like, okay, well, we just hit the 50-day moving average. Bitcoin could just sidestep this and like just literally go like sideways here. This is an interesting point, but I wouldn't say that there's like that much relevance to this breakout right now. That's just a side
Agreed.
note.
Agreed.
Um,
Agreed.
so okay, XRP. All right, let's just take this chart and we'll make it XRP. There's your Sol chart. That's a pretty detailed one. I think
Oh, that
Sol.
that's yeah, that looks good, man. That looks really good. We can come back to that if you'd be open to it.
Sure. What do you look at XRP on?
We can look at it towards
Binance?
the dollar. Binance would be all right. Yeah, sure.
Do you look at
If
it
you
like
put,
first Tether?
yeah, that's it. That's the one.
Okay, I don't ever look at this thing, but I know that there's a case and it's been a real thing to trade and I missed it, but whatever. All right.
I'm
So
getting gently bullish vibes on XRP. I'm wondering if the rest of the market is going to give us some sort of relief or some sort of bounce. I think that XRP is in a position now where it potentially can do that. I think so. Obviously, we can see what's the is that the stock RSI that you've got there at the bottom, or is it the RSI?
it's just the Stoke RSI.
Okay, all right, cool. I mean, it's looking really high. I mean, I'm seeing this across the board for a lot of different altcoins. Matic as well. I'm seeing the stock looking quite high. It looks like a pullback across the board is due, and which is kind of what you've been saying. But at the same time, I do think that if the market is going to give us more of a bounce, I think XRP could be one of those that gives us that.
Yeah, so okay, so let's dissect this chart because I've never really looked at it recently.
We
All right,
appreciate you, Iso. We appreciate you guys in the chat. Let us know in the chat. Everybody's quiet in the chat. Get your comments in. Thank Iso for waking up super early to do this stream for us. It's a big thing that Iso's done out of his kindness. So make sure you get in the comments in. All right, show some love so Iso can come back on the NJ show.
so all right, we have a weekly chart of XRP, right? Literally gone from 10 cents to $2 and has made a series of lower highs down, broke through an insanely important level at 60 cents. Like, look at how important this level is. Boom, boom, boom. You basically broke through the whole thing and had one of the biggest moves in the coin history. Came back down, bounced very hard, boom. Came in here, bounced, came here, bounced, and guess what? You broke through it. Anytime you see something like this, so this 60-cent level, this, I don't know, call it 57 to 60 cents, that is not going to be reclaimed easily. I don't care what people say. Like, that given this market environment, like, this is a crazy important level. So if you take the last high, 92 cents, pull a fib here, you basically have come into 30.2. So cents is the 61 cents is the 50%. So here. I don't know what's going on with the actual case. I know that the anticipation that they were going to win the case against the SEC is what drove this move. But like, what was the percentage move off the bottom? Let's just say here. So it went up 80%, man. Like, I don't know. Seems a little extended to me. I don't even care what the case is. Like, that's like, look at this. Like, look at the confluence of the level here. Take the wicks of things to the downside, usually are what, as XO says, SC says, cap the market. So like, this is resistance. Like, this is a serious resistance. I mean, if you flipped this level, you're probably gonna like, if you reclaim like this zone here, 62 cents, then it looks insanely bullish. But until then, this seems overextended. And when this stuff happens and it's a one-off event, catalyst-driven thing, like, guys, let's be honest, XRP doesn't do a goddamn thing. It's a meme coin. Like, it was supposed to be what banks used to move money around. First of all, stablecoins are fine. No one's using XRP. It's a joke. So like, it's just got a bunch of bag holders trying to get out and use anything possible. And so this is a pump based on that. And I don't know, maybe you get it, traps people into here, but I'm not touching XRP. It moved 80%. If I get something that moves 50% in this market, every investor is going to say, okay, what's next? Because the sustainability of any of these moves, given our macro backdrop, seems unlikely. So this is something I'll probably just stay away from. I'm not going to try to short it, but like, obviously this is a key high here at 64 because again, this is a POB, point of breakdown. Price tried to go up, went to 65, and then literally went to 34 cents. And we put in like, okay, you can argue we put in an accumulation thing down here and we broke out of it for, wow, 135 days. I guess I would look at this and say, what is the, I don't know, call it like percentage? Like, what did it move down here? I don't know if this will work at all. All right, 28%. So it breaks out of the high. Guess what? 29%. You could sometimes take a measured move out of consolidation, breaks the range high, boom, it moved. Okay, it moved 40%. Wow. It just seems extended. I mean, I don't have any reason to want to buy this thing. This is a big level. Reclaim this, then maybe we start talking. But I think when people get these types of moves in a bear market and they have these rallies and it's form of exit liquidity, buyers who come in around here probably get burned. That's my take on on XRP.
Very,
Probably
very,
goes
very
up just
solid
because I'm
opinion, bro.
bearish on it, but
No,
that's how I
no,
would look at it.
you've explained that beautifully. And for those of you who asked
Oh,
for
maybe there's
XRP in the
liquidity.
comments,
Maybe there's liquidity on Binance. Yeah, let's see here.
okay, all right, yeah, all right. Let's have a look at this.
I've never looked at it.
Yeah, this should be interesting.
All right, ETH's 1324. See, so now we're Bitcoin's 19.8. S&P's trading 37.57. ETH
Okay, all right, here we
BTC.
go. Moment is could this be the moment of truth?
Maybe, but be cool to see like, real time of like, are we going to hit liquidity? Do we come into these areas of interest?
Yeah, that would be really cool. That would be really cool to have that live on stream.
So XRP, Not that exciting liquidity-wise, mainly probably because maybe it's not heavily traded on Binance. I don't know. Doesn't have that exciting of a profile. Sometimes things don't. So I can't really say that much around XRP. I will say it's probably important to chart XRP versus Bitcoin and ETH to see relative strength in the market. Clearly, it has shown relative strength. We basically took out this high, called that. Yeah, man, this chart's crazy, man. Kudos to anyone who trades this. Like,
SC is the one who smashes this chart to pieces. I don't know how he does it, but he's too good when it comes to this.
Yeah, I mean, let's see the weekly level. Yeah, look, I mean, do we take this high out? Maybe we take it out, but like, again, like you're coming in, like, look at this, you're coming into resistance on a lot of this. So maybe it forms like this thing and then comes down and then goes up, but I just think need a little time to recharge would be my thing.
It's looking a bit like a pullback across the board. SE just tweeted as well, funnily enough, while we're on live here, and he tweeted saying he'll look to time BTC if 3726 on the S&P holds. So it's kind of looking like a pullback across the board. I think we were talking about this earlier on as well in the show. I think you had it marked out on ETH as well and whatnot. It'd be good. I think you're right. I think it'd be good to take out some liquidations, as you mentioned, before we start pushing up. I like that ETH chart that you've got there on the right hand side.
Okay, so 1320. Let's just go back to ETH here.
Yeah.
Um,
Guys, if you're enjoying the
I don't
stream,
think I've ever streamed this long on.
no, bro, we really appreciate you, man. Just let us know
Wow.
if you need to go at any point. Do let us know. But we're loving it, man. We love having you on here. We're learning too much, and goodness gracious, look at ETH.
Yeah, so 1326, ETH 13, S&P 3758. All right, so here we got right. These were the clusters that we were talking about. All right, so and again, like look how price drops and shorts come in. So like immediate price, we have this. So we've dropped off like basically a billion, just over a billion in shorts down to 540. Yeah, 244, right? So you're taking out market participants, you're taking out longs. So eventually this is going to turn red. Where that happens is something to take note. If it happens around the fib, it happens around that SR level, and then like you can see shorts piling in. S&P starts to bounce in this zone, right? If the pullback, Nasdaq you can watch. I mean, you can watch what is it? The dollar, right? Like it's a nice channel. Like this is pretty clear top. So chances are it probably comes back into this 108, 109, and then like maybe it bounces or this breaks down. But this looks like where the dollar is eventually heading. And so combining that with what indices are doing, what Bitcoin's doing, where the liquidity is, that's kind of putting all the pieces of the puzzle together. So it'll be interesting to see if ETH comes into the zone here, takes out the 1317 lick we just identified. Bitcoin 19.8 again. So we're coming into the 19.6 zone where we looked at liquidity. If you get a drop in S&P to maybe that 3720s level, you could probably do it, is my guess. How this is trading against the broader market right now, let's see, is there any? Yeah, so ETH versus ES down. Where's Bitcoin versus ES? Oh, sorry, I have a lot of charts.
No, you're good. You're good. We'll do one more after this if that's all right
Yeah,
with you.
see,
We'll
it's not
cover.
as down as much, but this is also Bitcoin versus ES. We saw ETH versus ES. ETH is down more, and that's largely a byproduct of ETH BTC dropping.
Yeah.
So you just start to see how price moves alongside the other asset classes. But yeah, back to high block. So we'll see. That's my dog.
Yes.
So we'll see how this looks in relation to liquidity if we get the pullback.
ISO.
Probably bid like mid 1310 areas seems interesting. 1300 is obviously a very pivotal area for ETH.
Agreed. And that's kind of where I'm looking at too, specifically 1300. Just a little bit lower than what yourself and SC are looking at, but I've got a plan to sort of reload on any pullbacks. But ISO, I mean, I'm conscious of time, and you've given us so much information here. Even I'm gonna have
Oh,
to
we wanted
rewatch
to
the
look at
stream.
Soul, I think. Oh, and here we
Well,
have sushi.
I was gonna ask you if
Sushi's
we
coming
could.
into the zone here now too.
I was going to ask you if we could get PYR maybe onto the stream. I know
Oh yeah, let's do
a lot of
PYR.
people want to look at PYR. So let us know what you're thinking of PYR, bro. As it will be a great way to sort of wrap up the everything that we've sort of spoken about. So we've spoken about
Oh man.
liquidation
All
levels
right.
on Bitcoin, on Ethereum, on the S&P. We've spoken about a potential pullback scenario which could be unfolding right at this moment. You've given us some beautiful insights into high block and XRP as well. It'd be great to have a quick look at PYR before we wrap up the show.
Okay, so yeah, man, I love it. Anytime I talk about PYR, they're like, "You're paid, you're a shiller." But the
Nah, they
reality is,
said
I
that to
found
me as
PYR.
well. Someone try come on the stream and say that to me as well. Could never. I would say, bro. I would say if it was sponsored. I've got a sponsorship thing right in the right hand corner. So feel free, bro. Feel free. Talk about what your thoughts are. Don't worry about what anybody else thinks. Screw them.
Okay, here's the interesting thing about PYR to me. I was looking at PYR here when no one knew what PYR was. They had no VC investment. They really didn't have that many games. They didn't have Elysium, their own chain. They were $150 million fully diluted valuation. And it was a small community of people. And the reason I took note of PYR was because of what the market was telling me in the sense of where capital was flowing and why. And we were still obviously in a very much risk-on environment with liquidity being flush in the system and crypto coming out of that really big drop in the summer before Bitcoin made that move in July. There were some signs showing that like people were funding a lot of the gaming metaverse sector. Wilder World was one of them. PYR was one of them. I mean, you saw things like Mana waking up, which is an old coin. And you saw like this whole Axie Infinity continuation of play to earn. And that was like the next big thing. And to me, it was like a very big moment in crypto in the sense that like everything up until that point, there was no use case for me. Like gaming was like a thing that made sense to me in the crypto environment. And for newer investors to be interested in it because it's relatable. If you explain DeFi to someone, it's like they're like, all right, when can I leave the room? This is fucking boring. If you explain gaming to someone and you start to throw metrics around of like this is how many gamers there are in the world, it's a traditional tech investor, interest, right? So it immediately draws in this new crowd, and there was a lot of money pouring into gaming. Metaverse play to earn because of Axie and them being on Bloomberg. Like if you look at how much money Axie was making in the NFT market, what it was doing, transforming lives in like the Philippines, wherever you want to call it, with basically people were playing a game and they were being able to earn money and support their family. So yada 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 became like this huge thing, and I was researching guilds and games, and I believe it was the YGG podcast, maybe one of them, because I bought YGG early because it was like cool. These guys are basically renting assets to the population that wants to play all these games because there's a large barrier to entry because NFTs cost a lot of money and like Axies were a lot of money, and like this was actually a pretty interesting business model until the guilds became oversaturated and becomes a pricing war where how are you going to extract that much value from each player when everyone's undercutting each other? That's another story. But PYR came to my attention because Jamie, the CEO, was on one of the YGG podcasts, and I was like, oh, cool. This is an interesting story. These guys have an interesting development roadmap in the sense they want to build these games. I went in the Discord. There was like a very energetic community. I think community is a huge component of crypto in the right reflexive environments. Price going up, obviously very powerful. Price going down, same thing. And so I started to research PYR, and I looked at the comps relative to what was in the market, and the market cap, the roadmap, the user growth that they were targeting. They were an NFT gaming studio that transformed into essentially a metaverse play, and they had 8 different games versus 1. And so if you just think about that as like a 1 fails, there's 1 that might work, or maybe 2 work and 1 fails, or maybe they're all a hit. Whereas a lot of the other games were just, or a lot of the other plays were just 1 game. So if your game sucks, then there's no like contingency plan or anything to fall back on. So putting the pieces together of knowing capital was rotating into this, understanding that these guys had no VC investment, so supply was not an issue in terms of distribution or unlocks coming onto the market. It was like, cool, this is attractive valuation. I like the community, and I'm going to buy a lot of this. And that was probably one of my best trades, like hands down. But again, I shilled it, even though I didn't know who any of these people were. And I just networked within the community and became friendly with them. So that happened, right? The bull run happened. Freaking Facebook changed its name to Meta. Like the whole world was like gaming metaverse. We're doing this, and it was a giant bubble. That's fine. That's how markets work. It's just no one to sell. It ran up a lot. Then they got hacked. They went through a series of issues. But I will say that, you know, during all of this time, like your coin can't fight what the macro landscape is doing, right? And so illiquid, people selling, like people wanting to get out, all these pumps, fine. But when price comes back down into here, which is essentially the area where I was interested in, and all of this was the case, and now you start to see the writing on the wall of they have their own chain, they're launching new games, their user growth is supposedly growing, and the networking amongst deep pockets seems to be working. And dude, these guys raised 8 million from Skybridge and FTX. Skybridge, Scaramucci, is a huge fund. You don't have to like them, but that's capital. FTX Gaming, I believe, on the venture side. The person who runs that came from a fund called Lightspeed. And the funny thing is that I was trying to help PYR network to VCs just because I have, you know, some of these relationships, just as I'm constantly networking in the crypto space. And no one wanted to look at it here. And the person who was working here, I'm pretty sure, is running this now. And boom. So 8 million injected into the project. So if you're just thinking like, okay, who's got the runway to withstand a bear market, then maybe it's these guys relative to its peers. So they have some really unique things coming with the actual metaverse gaming platform. You know, they've transitioned outside of so much of this play to earn, because play to earn is this concept that was really good in the beginning, but then you ask yourself, like, do people really want to play the game, or they just want to earn money? And so the stickiness and sustainability of your customer base or your players becomes somewhat in jeopardy if no one really wants to play the game. They're just clicking to earn money. So that transition in gaming metaverse, I think, has to happen. And, you know, Jamie, the CEO, seems pretty committed to this. And so the fact that he has managed to network and get this money with an additional 33 million that can come in from Skybridge on this Series A is telling you that, like, these guys don't just like throw $8 million at nothing. Like, they probably see something. So this can create a chain reaction of more funding potentially, or it's just like, all right, it was valued the same as it is here, and they just raised money. And these guys probably think that it's going higher. So I don't care what you think about the game, just look at the way the capital is flowing into it. And whoever's going to survive the bear market, it's going to need the runway. So when it got to $3, like, dude, it's been for 145 days, it's been like $3 minus like this. right? So you can argue that this is actually accumulation period for PYR. I think it's an extremely viable argument, considering that it has dropped. We'll do our little percentage decline here on how much it's dropped. 95%. Just take the 95% rule on things. If you buy this, look, it may not go up immediately, but these guys have a long-term incentive here. I'm sure the deal metrics are saying things like, I believe there's some sort of structure in the deal where they can invest in an additional 33 million, and I would imagine it becomes somewhat based on price thresholds. So I just think the thesis is pretty easy for me. It's down 95%. It's the same value it was here. They raised money. They seem to have a good plan. The community is still there. It has a pretty good social media presence, whether you want to view that as negative or positive. But when the market turns, this thing will probably go up a lot. And so I think $3 value PYR given FDV is an attractive investment based on the chart, thesis, valuation, capital flows, everything.
Insane analysis on PYR. I would have not been able to do it that good. I have to be really, really open and upfront here. The guys on this channel know me. I would have not been able to do it like that. That was seriously something I didn't expect that. In terms of PYR, just one final sort of question before we let you go, Iso, is if say for instance you were looking to get on board PYR, where would you be looking to get on board in terms of a potential pullback? Now, I think that the market is pulling back in general at the moment, and if I wanted to maybe reload some PYR on a pullback, what level or what levels would I be looking at to potentially take on that risk?
Sure. So again, we'll just fall back on our Fibonacci's. Let's just consider this 340 level, obviously a pivotal point, huge breakout, nice move to almost 440. Oh my God. So 390, 380, I don't know, somewhere around here. I mean, we broke out of this kind of triangle. So 380s, if it goes there. Maybe it takes this, you get a wick down. This thing is known to fake people out, and then it gets bought up. And the nature of the price action itself, look at all this. It was seriously defended. So if you're not telling me that the deal flow and everything that's been announced has something to do with this defense down here, then you're not you're not really understanding how price works. But yeah, I mean, it can just come down here, and then I think the next logical step is this 490 area, and we have a daily pivot up here. Where is it? Yeah, right here, 494. And so now you're asking yourself, all right, is the range essentially, I don't know, this $5 to $3 thing here? If the market stays risk on, you reclaim this, well, then you're going to be shooting for obviously the most key support and resistance zone, big breakdown. But yeah, it'll be interesting to see how this unfolds, because this is your high, this is your next high, this is your lower high off of this, and we haven't taken it. But if we do, then you just make a structurally a higher high, and if you take this out, then things become pretty interesting. Well, I mean, look at the volume, right? Okay, I don't even need to point this out. I just think that there's an interesting story here, and again, it's more than price. You wouldn't even have to use this chart. You could just use valuation on $150 million FDV at $3. It's attractive. You don't even need to pull up a chart. You could just buy it on that alone. But we have all these fancy things that we like to look for. If you look at 3-day chart, again, you have a pivot at 490. Let's look at a weekly chart. This is kind of like sushi. Sellers couldn't push down past this, right? Now we have this impulse. And again, this is why I'm looking at things on a weekly basis. This is demand on PYR. There's people who think it's going to go down here. Maybe, I don't know, but it's worth taking a freaking stab at it here. This is your low. Maybe this is your higher low. Come up here. you do one of these. Like, it's too early to tell, but like, this is constructive price action around an interesting level that matches up with valuation.
Amazing. Crypto ISO. That was an insane episode. Absolutely insane episode. I've got one final question for you, which I ask every single guest that
I'm
comes
gonna
on
have to
this
have some
show.
tea after this with honey, man. My voice is
You have done, honestly, brother, honestly, you have given us so much today. It's amazing. Guys, just to let you know in the chat, CryptoISO has not been paid to come on this show. He's not done anything to come on the show other than his own kindness. So he's come to do this show for you guys for free out of his own kindness. So make sure you guys are showing him some love. Iso, quick one. Do you have a Twitter account or a website that we could have a quick look at just before I ask you this final question?
Yeah, it's
Would you mind
crypto.
sharing that? Would you mind sharing those with
Yeah.
us? I've put your screen back up. Would you mind sharing that with us, just on
Oh,
your
on
screen?
Twitter? I don't even know if I have it up on my because I'm in the incognito. It's crypto_ISO. You could.
Crypto_ISO. Yeah, I mean, I'm going to share it on my Twitter as well. Make sure you guys are following me too at Trader NJ1. But ISO, honestly, man, thank you so much
Here,
for
we'll look at your
everything.
soul liquidity just so you have a sense of it before we go.
Sure, sure.
Um, all right. So yeah, 4 shorts to 1. So yeah, 34.5. Start getting up there. But again, look, this red delta down here, like boom, like turned green a little bit up here. Distribution came down, so now we're red again. But there's nothing really underneath minus down here. But yeah, this is your near-term liquidity on Sol. So I mean, we have 37.70. Where did it go down to? I don't know. Oh look, but yeah, just keep an eye on the levels we talked about. But yeah, my Twitter is crypto_ISO. You'll get a mix of all this liquidity theory, macro talk, White Claw, tuna fishing.
Amazing. Honestly, bro, amazing. One thing I would say, Iso, right? And this is a difficult question. It's as difficult as the first question that I asked you about Bitcoin. For the
Mm-hmm.
people that are here in the chat, I'm sure they're going to want to know as well. Are you going to come back on the NJ show?
Oh yeah, okay. I'm trying to do more of these things just because like I started doing spaces. People really like it. It's fun. Um, I have a lot of engagement on Twitter. People seem to like the stuff that I put out, and so
Rightly so. Yeah,
every
right.
every
Yeah.
every like all like the replies are like, dude, what does this mean? What does this chart mean? Like, I'm one person. Like, I can't reply every single time to tell you this is exactly what it means. So somewhat of it is a foreign language to a lot of people. So look, we were all there at one point where we had no idea what was going on. The only way that you learn things is to be a sponge of information. Obviously, like everyone trades and develops ideas from someone else, and they formulate their own opinion and piece together things. No one's reinventing the wheel here. And so the things that you see, you can agree with or disagree with, but you can start to, take pieces of it and develop your own thesis and theory. And then once you develop your own trading system and your own thought process, like I don't really care what people say on Twitter, to be honest. Like I don't. Like I'll look at it, but like my trading idea is my own. Like I'm not trading your money and you're not trading my money. So like if I'm wrong, fine, great. Like if I'm right, great. But like you're ultimately pulling the trigger, deciding the risk on the trade and executing it. So it's just like a weird thing on Twitter when you have like pushback on things or like show me your position and all this stuff. It's like, dude, I come from a world of traditional finance. There weren't like hedge fund managers being like, what's your net worth, or like show me your limit order that you're actually in these things. And
Yeah, I
so
mean, you don't owe
um,
anyone anything at the end of the day, and a lot of people know that. The beautiful thing about the NJ show is, we make it a rule here, especially in the comments and whatnot, to respect everybody's ideas, to respect everybody's opinions, and to be civil to one another. At the end of the day, we're all here for the same reason. We all want to change our lives. We all want to catch a bull market, from the beginning and ride it to sort of 80% of the way. We're all here to do the same thing. So CryptoISO, thank you so much for coming on this show on behalf of my community, on behalf of myself and the NJ show. Really glad to hear that you will be back. And I can't wait to have you guys back on the show. To you and SC, XO, Jim. We've had some really,
Damn,
really
was
great
that
guests
an
on the
hour
show.
and 40 minutes? Holy
Yes,
crap.
it has. It has. And it's been a fantastic episode. So, guys, let us know in the chat. Let us know in the comments. Thank Izo for coming onto the show. And he's let you know that he's going to be back. So, it's something to look forward to. You're going to have to watch this episode again in order to really understand everything that he spoke about. So that when he comes back on the next episode, you guys are ready for more alpha that he's going to be delivering. And, bro, once again, I just want to say kudos on your PYR analysis. That was insane. I really didn't expect that. I really, really didn't. Um, fantastic, fantastic. So,
Oh,
Crypto
Amoeba.
ISO.
Amoeba says, ISO, can you tell us how to protect a Rolex in Miami? That is for another time.
Amoeba has been hovering around the chat since early
Oh,
on
dude,
the
so
episode.
just so you know, Amoeba was like is a liquidity sniper, and I developed a trading curriculum with Zoran, and it's a whole series of things, and the way that I tested it, because like this was a new concept to all of us, and so Amoeba was the guinea pig, and I would just give him all of the course material, and he now is like the guy. If you want to go on Twitter, follow that guy, because like he'll put together a very much similar analysis in his own form with Fibonacci. He uses a lot of trader SC, like Monday low, Monday high. I know that's a very popular thing. Weekly open, and then he'll combine it with liquidity clusters, understanding cumulative lick delta, and saying like offsides, exhaustion points. So he's got the science down. He's like, yeah, he was the first person to actually learn liquidity theory and apply it.
Amoeba's good. Amoeba's good. I met him in Trader SC's class, and then XO FF'd him at one point. He's a first class trader. I have a lot of respect. Anybody that I meet in SC's class, I automatically give them respect because I know what journey they're on. But I digress. Right,
Yeah.
I'm gonna have to love you and leave you, Izo. But it
Oh,
was an absolute pleasure having you on the show, and honestly, we can't wait to have you back. Stick around, and we'll speak in just a moment. But I'll start the outro from here. Thank you very much, Izo. Is there anything else you'd like to say right before you cut off?
I hope you're watching this, White Claw, because you're missing out on the crypto audience.
Big time, big time, big time, big time. Crypto ISO, once more, thank you very, very much. Stick around, we'll chat in just a moment, okay? Guys in the chat, did you enjoy that episode? Let me know in the comments below if you did. Make sure you're subscribing to the channel because we are on our journey to 5K subscribers. And if you want to see more content from people like Crypto ISO, make sure that you're getting involved in the movement. The NJ show continues to deliver, and we deliver because we love our community. All right. We want to thank you guys for joining the show. Thank you for sticking around and really absorbing the knowledge. All right. It's a lot of knowledge that Izo dropped. And remember that he's done this out of the kindness of his own sort of merit. He's just one of those people. That's the kind of friends that NJ likes to make. So anyway, I'm going to love you all and leave you. Make sure you smash up the likes, whether you're watching this live or recorded. Make sure you're leaving us a comment. Izo will definitely see the comments that you leave for us. And if you enjoyed the PYR analysis, I mean, all of that is warranted just for that alone. So take care, everyone. I will see you guys tomorrow for another episode of the NJ Show. I will love you and leave you from here. Goodbye and cheers.